Class 12 Accountancy Numerical Problem Solutions, presented by eduxit.com. In this video, we are going to provide accounting for partnership basic concepts, distribution of profits solutions, problem 5 solution. The problem statement is as follows. Rakhi and Shikha are partners in a firm with capitals of 2 lakh rupees and 3 lakh rupees respectively. The profit of the firm for the year ended 2000 XA/XB is 23,200 rupees. As per the partnership agreement, they share the profit in their capital ratio. After allowing a salary of 5,000 rupees per month to Shikha and interest on partners' capital at the rate of 10% per annum. During the year, Rakhi withdrew 7,000 rupees and Shikha 10,000 rupees for their personal use. As per partnership deed, salary and interest on capital appropriation treated as charge on profit. You are required to prepare profit and loss appropriation account and partners' capital accounts. So, as per the problem, we have to prepare the profit and loss appropriation account as well as partners' capital accounts. It is also given that the salary and interest on capital appropriation are treated as charge on profit. This implies that the salary as well as interest on capital are distributed from the profit amount. In other words, we first calculate the profit in the profit and loss account and then we transfer it to the profit and loss appropriation account, and in that account we consider the salary and interest on capital. It is also given that the partners Rakhi and Shikha's capitals are 2 lakh rupees and 3 lakh rupees at the beginning of this accounting period. What this means is that this is not a case wherein the business is started from scratch. The business is already there, and these capitals are brought down from the previous accounting period to the current accounting period. So, where would we post this? Of course, as these are capitals, these should be posted in the capital account. So, let us first prepare the format for the capital account. Let us first write the title as Partners Capital Account. Let's then write the headers DR and CR to designate the debit and credit sides respectively. Let's now have the individual columns for date, particulars, journal folio, amount in rupees for the partner Rakhi, and amount in rupees for the partner Shikha. Now, as compared to the capital accounts that we were preparing for the sole proprietorship in the previous classes, this capital account is slightly different. As you might have noticed, it has the amount column for each of the partners, not just one amount column as we were preparing for the sole proprietorship. So, as you might have guessed, if there are 3 partners, there will be 3 amount columns, one for each partner. Similarly, let us have the same columns on the credit side also. As you know, for posting the capitals, we create the capital account. So, let's first write by balance brought down in the particulars column on the credit side. Let's then write the partner Rakhi's capital amount of 2 lakh rupees in her amount column. Let's then write the partner Shikha's capital amount of 3 lakh rupees in her amount column. With that, we have completed the posting of the capital balances brought down from the previous accounting period to the current accounting period. Let us now consider the next transaction in the given problem. The next statement in the problem is specifying about the profit. Let us handle the profit at the end. Let us proceed with the next statement. This statement is talking about the profit sharing ratio. Let us consider this one also when we handle the profits, not now. The next statement is stating that the salary of the partner is 5,000 rupees per month. Note here that this is not yearly salary, it is monthly salary. Also, the salary is specified only for the partner Shikha, not for the partner Rakhi. So, let's proceed with the analysis of the salary in the working notes. Let's first write the header salary to indicate that the upcoming calculation is related to the salary. Let's then write the subheader Shikha to indicate that the upcoming calculation is related to the salary of the partner Shikha. Now, it is given that the monthly salary of the partner Shikha is 5,000 rupees. So the yearly salary would be equal to the monthly salary of 5,000 rupees multiplied with 12. This is equal to 60,000 rupees. Now, the partner's salary is not actually a salary, but it's a way of distributing the profits to the partners. So it's not same as the employee's salary. If you remember, we post the employee's salaries to the salaries account, right? But here, it's not the case. The business will maintain a separate account called salary to partner account. This account is totally different from employee's salaries account. So the way we post the partner's salaries is by debiting the salary to partner account and creating the partner's capital account. Also note that as this problem is mentioning about the monthly salary, ideally we have to post the salary every month. But for the sake of simplicity, let's consider posting the yearly salary. Now, the preparation of the salary to partner account is not in the scope of this problem. So, let's leave out the salary to partner account related debit entry and let's directly post the credit entry to the partner's capital account for each partner. Let us first write salary to partner account in the particulars column on the credit side. As we have already seen, there is no salary allowed to the partner Rakhi. Let's then post the partner Shikha's salary amount of 60,000 rupees in her amount column. With that, we have completed the posting of the salary for individual partners in the partner's capital account. Let's now consider the next transaction. The next statement in the problem is regarding the 10% per annum interest on their capital. Just to remind you, their capitals are 2 lakh rupees and 3 lakh rupees. On this capital, we have to calculate the interest. So, in the working notes, let's first write the header interest on capital. Now, the interest on capital for the partner Rakhi will be her capital amount of 2 lakh rupees multiplied with the rate of interest on capital, which is 10 upon 100. Let's cancel one 0 in 100 for the 0 in 10. Let's then cancel the other 0 in 100 for the 0 in 2 lakh rupees. So, the final result is 20,000 rupees. This is the interest on the partner Rakhi's capital. Now, the interest on capital for the partner Shikha will be her capital amount of 3 lakh rupees multiplied with the rate of interest on capital, which is 10 upon 100. Let's cancel one 0 in 100 for the 0 in 10. Let's then cancel the other 0 in 100 for the 0 in 3 lakh rupees. So, the final result is 30,000 rupees. This is the interest on the partner Shikha's capital. Now, for posting this interest, we should debit the interest on capital account and create the partner's capital account individually for each partner. Now, as the preparation of the interest on capital account is not in the scope of this problem, let's leave out the interest on capital account related debit entry and let's directly post the partner's capital account related credit entries into the partner's capital account. Let's first write by interest on capital account in the particulars column on the credit side. Let's then write the partner Rakhi's interest on capital, which is 20,000 rupees, into her amount column. Let's then write the partner Shikha's interest on capital, which is 30,000 rupees, into her amount column. With that, we have completed the posting of the interest on capital for each of the partners individually into the partner's capital account. Let's now proceed with the next transaction in the given problem. The next statement in the problem is related to the drawings. It is given that the drawings made by the partner Rakhi and Shikha are 7,000 rupees and 10,000 rupees respectively. To proceed with the accounting treatment of the drawings, let's first write the header in the working notes as drawings. Now, the drawings made by the partner Rakhi are 7,000 rupees. And the drawings made by the partner Shikha are 10,000 rupees. When there are any drawings made, we should debit the drawings account and create the bank or cash or purchases or stock accounts. Remember that the drawings can be in the form of cash or through bank or it could be in the form of goods. As the preparation of any of these accounts is not in the scope of this problem, let's leave out these entries. Note that after posting the drawings related entries into these accounts, the drawings are transferred to the partner's capital account. Note that when we post the drawings into the drawings account, we post it on the debit side. So when we transfer the drawings into the partner's capital account, we post it on the debit side of the partner's capital account. as we are transferring the drawings out of the drawings account, we should credit the drawings account. Now, as we have already discussed, the preparation of the drawings account is not in the scope of this problem. So let's leave out the drawings related credit entry and let's directly post the partner's capital account related debit entries into the partner's capital account. Let's first write to drawings account into the particulars column on the debit side. Let's then write the drawings amount of 7,000 rupees for the partner Rakhi into her amount column. Let's then write the drawings amount of 10,000 rupees for the partner Shikha into her amount column. With that, we have completed the posting of the drawings related entries into the partner's capital account. Let's now consider the next transaction in the given problem. After dealing with the drawings amount, the next thing that we should deal with is the interest on drawings. But as we can see in the problem, there is nothing specified about the interest on drawings. So what should we do now? In this case, we proceed as per the provisions of the Partnership Act 1932 relevant for accounting. So as per this act, if the partnership deed is silent about interest on drawings, then no interest is required to be paid on the drawings. So we don't have to deal with the interest on drawings in this case. So let's jump to the next statement in the given problem. As you can see, there are no more transactions in the given problem. So let's directly jump to the appropriation or distribution of profits. It is given in the problem that the profit earned during the year is 23,200 rupees. Now, if you recall, the profit earned by the business is nothing but a credit balance in the profit and loss account, right? So, for distributing the profits, we should transfer the profits from the profit and loss account to the profit and loss appropriation account on the credit side. Also, as we are transferring the profits out of the profit and loss account, we should debit the profit and loss account. Now, the preparation of the profit and loss account is not in the scope of this problem. So, let's leave out the profit and loss account related debit entry and let's directly post the profit and loss appropriation account related credit entry into the profit and loss appropriation account. But first, let's prepare the format for the profit and loss appropriation account as it is not yet prepared. Let's first write the title as profit and loss appropriation account. Let's then write the headers DR and CR to designate the debit and credit sides respectively. Let us now have the individual columns for particulars, amount in rupees on the debit side. Let us have the same columns on the credit side also. Let us then write by profit and loss account in the particulars column to designate the profit transferred from the profit and loss account into the profit and loss appropriation account. Let us then write the profit amount of 23,200 rupees into the amount column. With that, we have completed the posting of the entry related to the transfer of the profit from the profit and loss account to the profit and loss appropriation account. The next step would be to transfer the partner's salaries from the salary to partner account to the profit and loss appropriation account. See, we have not prepared the partner's salaries account as it is not in the scope of this problem. But that doesn't mean that salary to partner account does not exist. It will still be there. It is just that we didn't prepare it as it is not in the scope of this problem. So, as the partner's salaries will be debited to the salary to partner account, when we transfer it to the profit and loss appropriation account, we should transfer it on the debit side. The corresponding credit entry would be in the salary to partner account as we are moving or transferring the amount out of it. Now, as we have already discussed, as the preparation of the partner's salaries account is not in the scope of this problem, let's leave out the salary to partner account related credit entry and let's directly post the profit and loss appropriation account related debit entries into the profit and loss appropriation account. Let's first write to salary to partner account as the subheader in the particulars column on the debit side. Let's then write the partner Shikha's salary, which is 60,000 rupees. As we have already seen, only partner Shikha is allowed to have the salary. There is no salary allowed for the partner Rakhi. So the total salary amount of all the partners is also equal to 60,000 rupees. With that, we have completed the posting of the entry related to the transfer of the salaries of the individual partners from the salary to partner account to the profit and loss appropriation account. Let's now consider the next entry. The next thing that we should deal with is the transfer of the interest on capital for each partner from the interest on capital account to the profit and loss appropriation account. Just to reiterate, we didn't prepare the interest on capital account as it is not in the scope of this problem, but it will still be there. as the interest on capital will be posted on the debit side of the interest on capital account. When we transfer this amount, we should transfer it on the debit side of the profit and loss appropriation account. As we are transferring this amount out of the interest on capital account, we should create the interest on capital account. Now, as we have already discussed, as the preparation of the interest on capital account is not in the scope of this problem, let's leave out the interest on capital account related credit entry. Let's directly post the profit and loss appropriation account related debit entry into the profit and loss appropriation account. Let's first write subheading to interest on capital account on the debit side of the profit and loss appropriation account. Let's then write the partner Rakhi's interest on capital, which is 20,000 rupees. Let's then write the partner Shikha's interest on capital, which is 30,000 rupees. Let's then write the total interest amount, which is 50,000 rupees, into the amount column on the debit side. With that, we have completed the posting of the entries related to the transfer of the interest on capital into the profit and loss appropriation account. Let's now proceed with the next step. Usually, if there is any interest on drawings, then we transfer it to the profit and loss appropriation account. But we have seen that there is no interest on drawings, so we don't have to deal with it. The next step would be to calculate the amount of profit that should be appropriated or distributed among the partners. Now, the total on the debit side of the profit and loss appropriation account is 1,10,000 rupees. And the total on the credit side of the profit and loss appropriation account is 23,200 rupees. From the total on the debit side, which is 1,10,000 rupees, if we subtract the total on the credit side, which is 23,200 rupees, we get 86,800 rupees. Now, this 86,800 rupees is debit balance, right? A debit balance in the profit and loss appropriation account represents a loss. So, this loss amount should be distributed among the partners in their profit or loss sharing ratio. Now, it is given in the problem that they share the profit or loss in their capital ratio. In other words, their loss sharing ratio would be 2 lakhs is to 3 lakhs. Cancelling 5 zeros in 2 lakh rupees with 5 zeros in 3 lakh rupees, we get 2 is to 3. So let's distribute the losses in this ratio. Let's first write the header loss sharing in the working notes section. Now the share of loss for the partner Rakhi will be equal to the total loss of 86,800 rupees multiplied with her loss sharing ratio of 2 upon 5. Cancelling with 5, 5 ones are 5, 17,360 are. So if we multiply the remaining 17,360 and 2, we get 34,720 rupees, which is the loss share of the partner Rakhi. Now the share of loss for the partner Shikha will be equal to the total loss of 86,800 rupees multiplied with her loss sharing ratio of 3 upon 5. Cancelling with 5, 5 ones are 5, 17,360 are. So if we multiply the remaining 17,360 and 3, we get 52,080 rupees, which is the loss share of the partner Shikha. Now for transferring this loss to the individual partners, we should create the profit and loss appropriation account and debit the partner's capital account individually. So in the profit and loss appropriation account, let's write the subheader loss transfer. Let's then write by Rakhi's capital account and the corresponding loss amount of 34,720 rupees. Let's then write by Shikha's capital account and the corresponding loss amount of 52,080 rupees. Let's then write the total loss transfer, which is 86,800 rupees, into the amount column. With that, we have completed the posting of the credit entry related to the transfer of the loss from the profit and loss appropriation account to the partner's capital account. Let's now post the corresponding debit entry into the partner's capital account. Let's first write to profit and loss appropriation account into the particulars column on the debit side. Let's then write the partner Rakhi's share of loss, which is 34,720 rupees, into the corresponding amount column. Let's then write the partner Shikha's share of loss, which is 52,080 rupees, into the corresponding amount column. With that, we have completed the posting of the debit entry related to the transfer of loss from the profit and loss appropriation account to the partner's capital account individually. In fact, we have completed the posting of all the entries related to the partner's accounts. So it's now time to find the totals, balance the accounts, and close the books. The total on the debit side of the profit and loss appropriation account is 1,10,000 rupees. Similarly, the total on the credit side of the profit and loss appropriation account is 1,10,000 rupees. So now the profit and loss appropriation account is balanced. Let's now proceed to the partner's capital account. The total on the debit side of the partner's capital account for the partner Rakhi is 41,720 rupees. Similarly, the total on the debit side of the partner's capital account for the partner Shikha is 62,080 rupees. Similarly, the total on the credit side of the partner's capital account for the partner Rakhi is 2,20,000 rupees. Similarly, the total on the credit side of the partner's capital account for the partner Shikha is 3,90,000 rupees. From the total on the credit side for the partner Rakhi, which is 2,20,000 rupees, if you subtract the total on the debit side, which is 41,720 rupees, we get 1,78,280 rupees. Similarly, from the total on the credit side for the partner Shikha, which is 3,90,000 rupees, if we subtract the total on the debit side, which is 62,080 rupees, we get 3,27,920 rupees. These are the credit balances of the individual partners and should be written on the debit side. Let's first write to balance carried down into the particulars column on the debit side. Let's then write the credit balance amount of 1,78,280 rupees for the partner Rakhi into the amount column on the debit side. Let's then write the credit balance amount of 3,27,920 rupees for the partner Shikha into the amount column on the debit side. Now the total on the debit side of the partner's capital account for the partner Rakhi is 2,20,000 rupees. Similarly, the total on the debit side of the partner's capital account for the partner Shikha is 3,90,000 rupees. Similarly, the total on the credit side of the partner's capital account for the partner Rakhi is 2,20,000 rupees. Similarly, the total on the credit side of the partner's capital account for the partner Shikha is 3,90,000 rupees. So now the partner's capital account is balanced. With that, we have come to the end of this problem. Thanks for watching.
Edixit.com is started to promote effective and efficient learning process to help the students with their learning requirements. To watch all our videos, please subscribe to our channel. Also, please click on the bell icon to receive a notification as soon as a new video is published. Please click on the like button if you like this video. Thanks for watching.